In this video, I will share with you what is the difference between having a bank and having a credit union. Hey everybody, my name is Michael and welcome to the Therealmichaelberry channel, where I have a passion for seeing millennials being successful with their money. If you're new here, consider subscribing to the channel, giving it a thumbs up because it helps other people see this video. In my last video, I talked about things you should look for as far as when it comes to switching banks. And someone asked the question, what are my thoughts on smaller banks and or credit unions? And as of right now, I haven't made a video on credit unions, so I wanted to make one to show you the differences so that way you can decide which one fits you better. There are three major distinctions when talking about a bank and a credit union. The first one being that the organizational structures are different. Banks are a for-profit business. They're led by their investors and shareholders because they're designed to make the most money possible. On the other hand, we're talking about a credit union. They are a nonprofit business. They're typically led by a board, if not the members itself, and their ultimate goal is to benefit the community. So that way, if they do make a profit, the money's given back to the community, if not the members of the credit union. Number two, convenience. Banks are typically more convenient than credit unions. They have multiple locations, they're nationally known, they have multiple ATMs, typically better technology, and better hours. Now, on the other hand, when we talk about credit unions, they are few in number because they are regional. They do have technology, but it's, in comparison to larger banks, they're not as great. What you lose in some convenience, you do make up in personal relationship. You get to know who your bankers are. You get to know who your managers are because there are so few locations, which tend to benefit the client better. And the last distinction is the products. The products that a bank can offer is typically everything. They have a person there to help you with your investments, personal accounts, business accounts, auto loans, credit cards, they have it all. Now, it's typically more expensive to use their money, meaning that anytime you get a loan from a bank, it's usually more expensive than a credit union. Credit unions typically have products that you just can't beat. When you get an auto loan, I've seen auto loans at 1%. I've seen housing at 3 to 4%. That their standard is fairly low, meaning that's going to save you money, potentially thousands, over the course of an entire loan. Now, with that being said, if you go to a credit union, they may not have everything. They may not have a person there to help you with your investments. Some credit unions may not have credit cards. So you run the risk of not being able to have all your needs met, where a bank can have each need met, but at a more expensive cost. Now, here are my final thoughts when it comes to credit unions and banks. Credit unions are likely to give you your best rates when it comes to loans and your best options when it comes to lower cost services for your checking and savings accounts. On the other hand, banks are typically more convenient, they give you better technology, and they give you more options when it comes to your services. So I want you to keep this in consideration when you're looking for an institution to serve your best needs.